We're going to be looking at the truth about buying your first buy to let property. A good friend of mine once said, if someone tells you that property investing is easy or simple, they're probably trying to sell you a course. A lot of people think that property investing is going to be a quick win. You know, you're going to be a millionaire next month or next year. It's not true. Today, we're going to talk through the pros and cons of buying a buy to let property. Should you consider it? Is it something that's for you? Is it something that will help you and your family make money? Make sure you watch all the way until the end because we'll be going through a lot of very important information. And always remember that, as with anything mortgage related, your home is at risk if you don't keep up the repayments on your mortgage. We're very fortunate to live in a country where you can actually have private property, and building a property portfolio for some people is a good way of establishing wealth and generational wealth. But why buy to let? Property can build your long-term wealth, and you need to consider things like generating rental income. You need to think about creating a retirement income and diversifying your investment. These are some of the reasons why someone might consider investing in property as a way of building wealth. My name is Lindsay, and I've been in finance for over 30 years. I've done lending, I've done wealth management, I've done mortgages, and I've done collection. I do these videos that I can explain topics to you that my clients ask me about frequently, but always speak to a mortgage broker. Don't get your legal advice, your tax advice, or your medical advice from some guy on the internet or some girl. I am here to make sure that you understand things, that when you speak to a professional, you can actually get the information that you need and you have somewhere that you can sanity check it. So, is right to buy something that's good for you? Do you want a second income? Do you understand the recent reforms? This is an important thing. There's been some recent reforms in the UK that can affect how you manage your property. Can you afford unexpected repairs? And are you investing for at least 10 years? So we've recently had something called renters reform, and renters reform has fundamentally changed the way that landlords manage their property because it's given the tenants a lot more rights. It's given the landlord a lot more responsibilities and things that they have to do. So if you're considering being a property investor, what you want to also understand is what it means as far as time, as far as commitment and understanding. It's no longer, and I don't think it ever was, but it's no longer something that you can just buy a property, rent it out, and expect money to be flowing in. You're going to have to do the work if you want to be successful. If you want it to be something that does create generational wealth for you, and you want to be a landlord, then it's very important that you understand the new laws and the new regulation. Property should be viewed as a long-term investment. So how much do you need for a deposit? The thing is, it's a lot different with a buy-to-let property. So if you're buying a buy-to-let property, the way that the deposits work is different than a residential property. This is why speaking to a mortgage broker is vital. Usually, for a residential home, depending on your profile, you could maybe get a deposit of 5%. People always talk about that magic 5% figure or 10%. What you'll find with buy to let mortgages, you're typically going to need about 25%. Sometimes it's 20%, sometimes it might be more than the 25%. But just as a rule of thumb, you're going to need about a 25% deposit. The other things that you need to keep in mind are the way that the deal will be structured. So here's a good example. You have a £200,000 property. You're going to need a 25% deposit, so that's £50,000. So that means a mortgage of £150,000. So that's the amount that you're borrowing from the bank. But you have to keep in mind that in addition to the deposit, you're also going to have to think about legal fees, valuation fees, possibly. You're going to think about broker fees and product fees. A big mistake that a lot of people make when it comes to mortgages in general, but specifically to investment property, is they forget that the product fee is in addition to all of the other fees. So what do I mean by that? The first question people usually ask when they're getting a mortgage is this the cheapest rate? What you'll find, particularly with buy to let mortgages, is the lowest rates usually have the highest fees. I've seen people who are purchasing and they're like, just give me the lowest rate. And the product fee by itself might be 15 or 25,000 pounds. So don't get caught up in this. I need the cheapest rate mentality. Look at the affordability, look at the other fees involved. Yes, you can add the fee to the mortgage, but you're doing this to make money. So you want to make sure that the amount you're making each month, the time that you have it fixed, all of these things are going to stack up in a way that you're making money and you're putting money in your pocket and you're building equity and generating generational wealth.